I'm looking potentially at another corrective pullback and then maybe a rally in the first half of next year. Then I see the potential, at least the risk for a very substantial top, and that could lead really to a serious market crash. So that might happen next year or late next year, maybe 2025. But I think we are very close to a significant top on the S&P 500.
Hello everyone, and welcome to another episode of The Pragmatic Investor. My guest today is Ben from More Crypto Online. After Bitcoin has broken above 40,000, a lot of people are very excited about the coming bull market. So today I got the chance to ask Ben what his opinion is about the coming bull market and crypto in general. Ben primarily uses Elliott Wave analysis, which is a form of technical analysis. So we dove deep into what the charts are telling Ben right now. We covered specific points of resistance and possible topping targets for Bitcoin. We then dived into trading strategy. How could one gain exposure to Bitcoin now that it has begun to take off? What kind of levels could we watch out for a retracement? And also, when should someone start taking profits? We also covered Ethereum and some of the altcoins. I really enjoyed this conversation with Ben. He's one of my favorite analysts to follow when it comes to cryptocurrencies and Elliott Wave. He understands Elliott Wave very well and also mixes this in with great knowledge and strategies on how to actionably implement the theory. If you haven't already, please go ahead and check out his channel on YouTube and his website. The link will be on the description. And as always, if you haven't already, go ahead and like, share, and subscribe to The Pragmatic Investor wherever you're listening. And if you haven't already, go check it out on Substack. I do a lot more over there. As always, I hope you enjoyed this conversation as much as I did. Last time we talked, I believe Bitcoin was hovering somewhere around 26,000, kind of boring us to death a little bit. And obviously the last few weeks have been anything but boring. So, what's your outlook after this last rally? I mean, is this, obviously I know the answer is going to be, it depends, but is this a bull market confirmation? Is the bull market in full swing now?
Yeah, I mean, obviously last time, it's been a few weeks, been a few months now, but I think also last time we were already talking about that my perspective is the bull market has actually started, but obviously we still needed to break out above that sort of $31,000, $32,000 level, which then happened. I think at the time I wanted to see a little bit more of a pullback, but just a corrective pullback in an overall uptrend. Now Bitcoin took the direct route, which it obviously always can. So just confirmed my bigger picture analysis. Just on the smaller time frames, we didn't get that last pullback that would have made things a little bit clearer. But overall, I think, my take has been for, I think, most of 2023, actually, that we are in a bullish market. Of course, this can always take different pathways. Bitcoin can take different pathways to the all-time high. At the moment, I'm looking at basically two main scenarios. One where Bitcoin can take really a very direct path to $125,000. How realistic is that? I'm not entirely sure, but it will also not, it will be direct, but it could still be characterized by a lot of sideways price action in between. So it can still take a while to get there, but no significant pullbacks, more sideways action. And then there's another scenario where there could be quite a deep pullback, but we have very clear support levels to watch. But also then I would say any pullback I would personally use to add to my positions, because I would, first of all, it will depend on the structure, but from what I see now, I would expect it to be a corrective pullback. So rather a pullback in a larger uptrend that I think most investors should not fear, but rather see as opportunity to maybe add to their positions, which I will do as well.
Mm-hmm. Right, and that is kind of the question now, right? Because I'm sure a lot of people are looking at the Bitcoin price now and thinking, "Wow, did I miss the train? How am I gonna basically board this moving train?" How do you see that? What advice would you give to someone who's now looking at Bitcoin, kind of a bit afraid that that they maybe missed their chance, but also looking to get some exposure there?
Yeah, that is. I would first of all say you're probably still early, because I've done a bit of a study on his the last bull run, which started obviously after March 2020. after the crash that we had, overnight crash of, I think it was 40% or more. Now, most people didn't buy that dip because they were scared. So that's normal. Some did, but most people joined along the way. And I took it, I looked at the Google trend results for Bitcoin back then. And it was really not until December 2020 that most people, you would say most retail people that normally are not involved in crypto, really were searching for Bitcoin and altcoins as a term. So Bitcoin at that point had made 400% of the lows. So that was when Bitcoin was close to all-time high. So I would say most people will not even think about Bitcoin until it gets close to all-time high, because that is when, so that's 65,000 or more. That's when it will be on the media, everywhere, mainstream media. And that's when most people will probably think about Bitcoin. And then they have to, if they're not prepared, they haven't got an exchange account, so they have to do that. And then most people will probably not buy until it's like 80,000 or 90,000, which, is too late. But now I think it's still fairly early. So I see it at the moment as a bullish market. So setbacks, I think, can be used to enter positions. Obviously, it is important that, getting a position, I think if nobody, if there is somebody who wants to get a position, obviously it's important to study the charts, get a broad understanding of how the chart looks like, what the important levels are, I think. If someone doesn't want to do that, that's fine as well. Then at least that person needs to know that the position should be of a size that if it drops down 30-40%, which can still happen, potentially, even in a bullish but short-term bearish scenario, that person needs to be able to sleep well, okay? So I think a position, if someone wants to be in a market and has no position, I would always say get a position. The question is always how involved that person wants to be. So do you want to look at the charts, the levels, or is it literally just hodling or getting a core position for the bull run? It's always difficult to say when we're in a rally to find a good entry, which is why I said, I think also last time when we talked, I recommended basically building a good core position as long as we are, in these price ranges below 30K, building a good core position, because for most people are not traders. So they just want to have something to ride the trend to all-time high. And I think that's still a good way of doing it. We're still early. Getting a small position and then waiting for more opportunities to get in and building it. I think that's probably the best advice, I think, or recommendation, guidance. But if we really are in what we call an Elliott Wave, a third wave rally, which is a very aggressive rally, it's really hard to find a let's say, a pullback entry, which I like to use.
Right, absolutely. I think you hit the nail on the head there when you talk about the idea of you need to get a position that you're comfortable with. At the end of the day, you need to realize what kind of investor you are, and if you're going to hodl, if you want to trade a bit more, but you need to stick to a plan that you can execute. And of course, that happens by managing your position size and knowing how you would react. For example, if you've got a pullback from here, which is what I wanted to discuss next. So we kind of talked about the idea that obviously we are in possibly a third wave. Bitcoin could take the more direct rally up, but we have had, of course, in previous cycles, obviously, especially looking at the last one, that kind of a pre-halving pullback. Obviously, the last one was very pronounced because we had that whole COVID thing where Bitcoin actually, rallied a lot. Basically, what would be these months, about 6-7 months ahead of the halving, then 2-3 months kind of started selling off. If we did get a pullback from here, what are the kind of key levels you're looking for below, let's say?
Yeah, so first of all, I think I'm not looking for that deeper pullback yet. Even in the scenario where, it can happen, yeah. And then I have 34,000 currently as important support. If, however, even in that scenario where we have to expect a deeper pullback potentially, which is one of the likely scenarios, I would still like to see Bitcoin first get to like 50,000, maybe a little higher, and then that risk increases for that deeper pullback. And then it will be something, I would have to measure it when we get to a top, but the level would be now the key level really, where I would say, oh, if we drop below that level, we're not in a bullish market anymore. That is 19,000, so that's quite far away. That tells you a lot about the risk actually and how far Bitcoin could drop. Doesn't mean it will drop that much. Bitcoin has throughout 2023, even in deep pullbacks, Bitcoin has not maxed out by far what it could have done in that scenario. So pullbacks were rather shallow on the Bitcoin chart, also in 2023. So therefore, I'm not necessarily expecting a very deep pullback. Therefore, I always like the idea of scaling in, so buying in tranches when we get pullbacks. There's always, obviously, again, that depends on the personal strategy. There are people who like to wait for a confirmed low in place before they open a position. There are others who buy in the pullback, but with very clearly defined parameters. Okay, I don't want to just blindly buy the dip. Even though for Bitcoin, because I see Bitcoin, in contrast to altcoins, more like a portfolio asset, I don't mind so much. So, for Bitcoin, I've got 3 portfolios. I've got my HODL portfolio, which, to be honest, I probably will not even touch when we get to 100,000 plus. Then I've got my, what I call a core position, which is my longer term swing trading position, where I basically want to ride the rally to all-time high territory and possibly a bit higher. So I will significantly reduce that in all-time high territory. And then obviously I've got some short-term positions. And again, because I see Bitcoin more like a little bit like gold, more like a portfolio asset, where I don't mind so much if it comes down very low, because I have that long-term horizon, especially in my other portfolio, which I don't have with altcoins, because I know that most altcoins don't survive more than 2 cycles typically. But for Bitcoin, it's different.
Right. Now, you've mentioned a couple of times that $100,000 level. I'm pretty sure we covered this a little bit in our last conversation, but just wanted to go through it again for anyone listening. What kind of targets are you looking at, and kind of give us a quick overview of how exactly you're reaching those targets?
So for Bitcoin, or also for Ether?
Let's go with Bitcoin first.
Yeah, so Bitcoin, I would see, so the projections currently, they point sort of to, 100,000 plus. I see 125,000 roughly as a very likely target. Possibly could stretch to 175,000 if conditions really align in a very, very bullish way. I would be surprised personally if it goes beyond that in this cycle. Now, the next cycle might go way higher, but obviously in this cycle, I don't see Bitcoin go much higher than 175. I mean, that would be I don't want to give it a maximum target, because we know that cryptos can always surprise also to the upside. So but when we get into that area, I will definitely have taken significant profits and will then just purely probably track support levels and not give any further projections, because we are then at a point where it's basically like, driving on site, where we have reached the targets, and it can still extend higher as long as certain support levels are holding, and I would just continuously adjust them to know when the current trend will break. But sort of, I see it at the moment. There's an important area around 50,000 on the way up, so that's an important level where we probably could see some resistance. Then 65,000. And then there will be, and can't determine that yet, but there will probably be another long, probably sideways consolidation before we really get that final push to above 100,000. So that could be a very boring sideways consolidation before we do that final push. Yeah, and I, as I said, most people who are not really involved in financial markets or crypto, they will not probably touch Bitcoin until it gets to all-time high territory. So they will start to look for how to open an exchange account when Bitcoin gets close to, 65,000. And I think most informed investors or traders actually want to be positioned then. Yeah.
Right. Of course. And now, you don't want to talk about the highest possible target, because like you said, Bitcoin can always surprise. What about the lowest possible target? Because I do see a lot of people now, for example, on Twitter and stuff, getting very excited, obviously, talking 100K, 200K. But is there a scenario where, for example, Bitcoin doesn't break 100K in this cycle? Because that's kind of an idea that I've been playing around with the last couple of days.
Yeah, technically, really the requirement for the wave count that I'm tracking to be valid is just basically it needs to be a 5-wave move, and it needs to be above the all-time high. So technically, if it gets somewhere above 65, 66,000, we have the right structure, it would be a valid scenario. But looking at projections, I would be surprised if it doesn't reach at least 90,000. But it was already in the last bull run, projections actually pointed to 100,000 plus. I could at the time see that it wouldn't get there quite quickly when it broke, I think, below 55,000, and then warned also my followers. So again, Elliott Wave helped us to recognize the change in trend, even though I there initially expected to get about 100,000. So we need to track very closely the structure at every turn. But yeah, personally, from what I see now, I would be surprised if in a bull run we don't get to 100, well, at least 90, but ideally I'd like it to be above 100.
Right. But, like you say, I would be surprised, but, markets do tend to surprise us. And I just feel like, there's this whole narrative, also this narrative around the halving cycle, which, at some point, right? I mean, when has the market ever played out exactly the way everyone expected it, right?
Yeah.
So Bitcoin might have some surprises for us.
Yeah, and you see a lot of that. A lot of people talking about that, that pre-halving dip, which might as well happen. But how many halvings did we have? Is it really enough to say just because it happened so many times it will happen again? It's often not the case, especially if it happened like 3 times. Will it happen the 4th time? Yeah, people then expect it, and it might just not do it. So that's why I just focus on. I don't like the idea of looking at a chart and say, okay, because it always happened like that, it has to happen again. I think it's good for tweets, but it's not really good for a strategy. I think it's something to be aware of, but obviously we're tracking, for example, on a daily basis, the relevant levels, the trend, and really only if the first support levels start to break, only then I can assume that some kind of dip is starting. Until then, the trend is just, being followed. Like we see that on the S&P 500 at the moment. A pullback is very much due. It's really had a significant rally from, I think, end of October. A pullback is due, but my view is also, we don't want to call a top in place until at least we have the first levels that break and tell us. The market always needs to tell us. And if the trend can always extend, further than most people would think is reasonable.
Yeah, absolutely. I think, like you say, it's important, especially with trading, to take it level by level, and it's just tracking those movements every day. Now, how about Ethereum then? We've covered Bitcoin. What are the targets for Ethereum right now?
So Ethereum, I see. I think we talked about last time already that I see Ethereum from a structural point of view a little bit more bullish than Bitcoin. So I see the potential that Ethereum could outperform Bitcoin. So that's I think I see that in the Elliott Wave structures, but I also see that when when analyzing the ETH BTC chart, so Ether basically measured in Bitcoin.
Right.
It's also at a point where a turnaround is currently in a downtrend. So Bitcoin is still leading, which we see when we look at the Bitcoin dominance chart as well. Bitcoin is still steaming ahead. But I think we're getting towards the point where Ethereum could take over soon, and also altcoins. So obviously talks about an altcoin season will happen at some point. That's typically when Bitcoin dominance drops. So the altcoins are outperforming Bitcoin. So yeah, generally I see Ethereum has the potential to outperform Bitcoin. And I see Ethereum possibly rally a little bit more aggressively then. And targets, sort of the ideal target range for the bull market, I would see around $8,000 to $12,000. It might, like Bitcoin, stretch a little bit higher. So if I like an extended target would be around $17,000 to $18,000. But I only see that really in a very, very bullish environment.
Right, of course, that makes a lot of sense. And now, talked about Ethereum, and you mentioned that altcoin season. And you must be quite happy because last time we were talking about Cardano not doing so well, for example. Recently got a nice little pump there. What do you think about the altcoins? Cardano and maybe some other good altcoins that stand out to you at this point.
Yeah, I mean, I'm following obviously quite a lot of altcoins. I think the broader altcoin season is definitely not there yet. I mean, historically, if we look at historical how the money is typically flowing in the crypto market, it typically starts with Bitcoin. So it's quite healthy if Bitcoin rallies first, which it has done throughout 2023, outperforming most altcoins actually. Then at some point when money starts to flow into Ethereum, that's also when you see a lot of altcoins perform well, historically at least. I mean, this year we've seen Solana outperform basically most coins. But there will always be exceptions along the way. But we talk about generally across the market. Typically, at some point, Ethereum would start, and then a lot of the altcoins would follow. There's sort of the cycle, and then the last point is when all the crazy high risk micro caps are going to go. People will think go to the moon, but that's probably when it will all be over then. So, like when everybody wants to get into altcoins, that's the time to sell it all probably. But when we look at some coins, I mean, Solana has really performed well. I don't see it anymore as really a very attractive entry point right now. So I rather, because I like to trade pullbacks, I'm rather looking at structures that showed already a rally, but are currently pulling back. There are some that I'm looking at, like, for example, and it might not be the very well-known ones, but I'm looking at LDO at the moment. I like the GMX chart somehow. It's not best chart, but also shows a bit of a pullback at the moment. VAI, so that's one of the AI coins, shows some potential. But they're obviously altcoins, so these structures often break because they are so correlated with Bitcoin as well. But the point is when trading altcoins, I always think, you're picky, you look for the structures that give you very clear reward and risk setups, and then you know when to get out. And that's why I look for these so-called 1-2 setups just before a third wave rally, which is often the most aggressive one. But yeah, I mean, most coins currently show upside potential. There are some that have shown now a 5-wave structure to the upside where I'm just waiting basically for a pullback. And another one is, CFX is one that showed a 5-wave structure already, is currently in a pullback. So yeah, just to give a few examples.
One that has done very well, I'm not sure if we talked about it last time, and I'm a personal fan of, is Rune, Thorchain.
Oh yeah, you're right. Yep, that's also one that actually performed quite well. And it seems to be on its way to a larger support area at the moment. I don't have the exact parameters at the moment ready, but I know that the support for the current pullback is around $3.14, and it should go a little bit lower before bottoming. I think it's now at, I don't know, $5 something. So it should come down a little bit more. I will probably add a position as well when Rune goes a little bit lower into that pullback zone. But yeah, should also ideally go a little bit higher. But it will turn bearish. That's the thing with altcoins. I really treat them as, let's say, trading only, swing trading only, not really for investing, because the setups often do break. You just need to know when the structure breaks, and then ideally you want to be out. Now, I also have a order portfolio, but the positions are, the size of the positions is sort of adequate that I can sleep well, even if a project, goes down, which can always happen. So again, I think risk management is always key. But yeah, Rune is probably that scenario that I'm following, the bullish scenario that might take it next to $8 to $12. That will break below $3.14.
So that would be like a wave 2 pullback back down to that area, that $3-4 area, you think?
Yeah, that's actually on the Rune chart at the moment a wave 4 pullback. It should still get a nice wave 5.
Yeah, absolutely. And you make a good point, and I think anyone who's been trading Bitcoin the last few cycles can't can't understand the importance of course, being able to take profit when you're in the green. And I've certainly taken the chance after that pre-epic run up 500% on Rune to take a little bit off the table at least.
Yeah, I think too many see the money and don't try to protect the money, and then they don't want to take any profits. But I think it's so important at least to take some profits and never let the winning trade become a loser.
Right. Yeah, absolutely. Now, we've kind of seen, altcoins kind of, even though maybe not fully on altcoin season, but, obviously a few months ago, the sentiment on altcoins was, completely in the gutters. We've seen a little bit of a pickup there. Are we going to see this kind of recovery also in the, kind of the next level of speculative crypto assets? Some of those NFTs maybe making a comeback. Do you have any view on those?
I'm not a great NFT trader or investor. I've got a couple that I lost money with, but they were just very, very, very small speculative investments, more for fun. But yeah, I think NFTs are going to come back. I mean, they've never really left, have they? But obviously they've lost a lot of value. But yeah, I think you will see NFTs come back at some point. But I don't understand enough about the NFT space to really judge when or how exactly or what's the latest trend. But yeah, I think they are here to stay probably. But I think the real use case of them is that I think that's what's really still evolving. What many people still don't understand how NFTs could really change certain industries as well. But I think there's a lot of also regulatory stuff that needs to follow and has to be developed first as well, actually. It's what we currently see in crypto as well, where, I think you have all these exchanges and there has never really been a framework or, regulatory framework, especially in the US. And now they introduced that, and then all these exchanges, they, what they're doing, obviously with Binance and so on. So, yeah. Not saying the exchanges are innocent, but, it's difficult, obviously. It's sort of emerging, and then to operate in that space while regulations are still emerging, obviously has a lot of risk as well. But yeah, I think NFTs they are probably going to come back. Difficult to say when, but it's probably, if I had to make an educated guess, it's probably when the masses are coming into crypto. So basically when Bitcoin is in all-time high territory, I would say. People get the FOMO. And then at some point they might rally together with very risky micro cap altcoins, I would say.
Yeah, that's true. And you bring up some interesting points. Obviously, the regulatory environment, something that is still kind of always ongoing with crypto. And to an extent, I feel like, because of this ETF launch, a lot of people are kind of discarding this risk right now, right? Like, oh well, they're gonna launch the ETF and Bitcoin's going to be all right. But there's certainly a lot of stuff still going. I think it was yesterday. Senator Elizabeth Warren just introduced a bill, kind of trying to regulate crypto and kind of going a little bit after self-custody, which obviously is not very good.
Yeah, absolutely. I mean, I actually haven't looked into it too much detail. What that says or the latest news and updates about regulations and everything, but yeah, I mean that's the reason why we say crypto as a whole is obviously more risky than other asset classes. More opportunities, but also higher risk. And yeah, that's why I say that's why I don't see altcoins, for example, as really as hodl quality, because a lot of people say, okay, I'm just hodling my altcoins, but really hodling means for me I hold it for maybe even several cycles for years, but they don't normally survive more than 2 cycles, and Bitcoin is usually outperforming 99% of altcoins in the long run. At least that's what the data says. So there's no reason to hold an altcoin. Core position, yes, holding maybe to all-time high, then sell. That's great, but then everybody still needs to be aware of the risk generally. In crypto, I know people who are only invested in crypto. I find that not very clever. I mean, that everybody has to decide that for themselves. But that's, I think, where you manage that risk for yourself on a portfolio level. Have maybe some other assets, have cash, I don't know, gold, silver, stocks, different assets in your portfolio, where then obviously if anything happens to crypto, your remaining portfolio can balance that.
Mhm. Absolutely, yeah. It's important to stay diversified. That's undeniable. Now, I was wondering because you've mentioned a couple of times this idea that obviously, we're going to reach the top once once all the retail begins to pile in. That's kind of when you're approaching that top. An idea that kind of is also, within kind of the idea of certain wave structures, right? That's kind of how they develop that idea of the sentiment. To that extent, do you ever complement your Elliott Wave analysis with something a little bit more like, let's say, on-chain analysis, maybe something that's kind of looking at the trends in like new active users or stuff like that?
No, typically not. I mean, I used to look at it because, I mean, it is interesting just generally to know what's going on. I think it's important to be aware of it. I mean, it would be concerning if, long term, let's say Bitcoin's users decline or something. But yeah, no, I don't. Fundamentals don't really, I mean, they do sort of have an impact on price, but it's very oftentimes differently to what many people think they do. For example, the whole topic of tokenomics, which was very big in the last bull run. Nobody's talked about tokenomics in the bear market. Even the best tokenomics haven't helped any coin to not drop in price in the bear market. So it's all sentiment driven, and so I think those fundamentals, they only have an impact on price when the people believe it and when they when they get hyped about it, and that again, that all comes down to sentiment. So yeah, I mean, there is certainly fundamentals or on-chain data or things like that. They only, for me, are important when it comes to maybe investing. But I don't see altcoins as investment quality. So only Bitcoin, Ethereum, and but I wouldn't use on-chain data. There are a few good on-chain analysts, I think, around. But I think trying to it's more about, okay, how stable is Bitcoin maybe as an asset. I wouldn't really use it to try to determine prices. I rather am a fan of keeping it simple. So I don't want to have too many inputs in my analysis, because where do you stop then? I have Elliott Wave, then I could always try to find something to confirm my bias. Okay. So I try to just keep it objective and use the Fibonacci levels, which are very objective, to tell me when I'm wrong in the market. When I, for example, have a preferred scenario, but I know, okay, this is the level where I'll be wrong. There's no point having an additional on-chain data to say, okay, it's probably going to go further or something. It just makes it too complex, and then you get into that analysis paralysis, problematic situation where you have just too many inputs and you don't know, or what do you focus on, and it gets too complex in my opinion.
Absolutely, yeah. Sometimes that's just more, and it's better to just have a clear strategy and just stick to it, right?
Yeah, what are sometimes this is just because it is a very nice, visual guide for people when to buy or sell. There are many of these charts. I think there's one website that's called lookintobitcoin.com. They've got, these sort of, they've got rainbow chart, and they've got the hodl waves, they call it. There are different bigger picture graphs, charts from especially Bitcoin, that basically gives you a good idea when it's time to buy. Yeah, so when nobody's interested, basically, that's normally the time to buy Bitcoin. And also tells you when the market is overheated. But because we use the Elliott waves, we don't really need that. But they are some of the charts that I sometimes look at that are sometimes very helpful. Yeah.
Right. Yeah, absolutely. And now, I wanted to get your opinion on, of course, the crypto miners, because we've also seen those catch up a lot recently. Simple question here. If I were to buy a crypto miner today versus Bitcoin, do you think the miner would outperform?
Difficult to say. They are certainly very volatile. I think some of them could. I mean, I really only look at, from a chart point of view, I've looked at Riot before and Marathon Holdings. The charts are, I would say, unreliable, I would call them. So they they are difficult to really. There's no clear scenario. That's the problem, and that always makes the analysis and also trading difficult. Yeah, I don't see them as good investments. That's also related to fundamentals because most of them don't have a positive cash flow. They can be, if the setup shows, they could be an interesting trade. But I don't think, if I recall the chart correctly, there is an attractive setup because they've already rallied now. And I find these charts highly unreliable because they are not moving in impulsive structures. So we always look for impulses to ideally we trade what's clear and look for the setups of very clear charts. They show what I would call a diagonal structure, which can also be corrective. So yeah, there are very clear levels that we can define where we say, okay, the setup breaks or the chart goes into a more bearish scenario. But yeah, it's hard to say it will outperform Bitcoin. Yeah, I'm generally skeptical about the minor charts.
Yeah, it's a good point. I think a lot of people might be attracted to the miners, but it's not just about seeking potential return, but maybe finding those clearer setups and more high confident, which, like you say, maybe some of these mining charts don't quite offer.
Yeah, I think the problem that I see again and again is when people like actually to find an entry in a certain chart and then they try to force clarity, but sometimes the chart is just not clear and it rather tells you, and that doesn't mean Elliott Wave doesn't work, but the Elliott Wave actually tells you, oh, be careful with this chart, right? And you might then make the decision based on that actually not to trade it because it is very unpredictable, or it is there are just too many different scenarios. The market hasn't really made up its mind, and that can be a very valuable outcome of the analysis as well. Whereas it can be much more useful if someone's really looking for good trades to just not really care about what company it is or what stock it is or what crypto it is, but just look for the good setups that show.
Right. Yeah, absolutely. Again, that does make a lot of sense from a trading perspective. And just to wrap up, since we are recording this, I think just ahead of that Fed meeting, well, I think it's happening just now. Probably post this once it's done already, but what are any thoughts there on the current macro outlook? Of course, we've got that CPI report yesterday, kind of in line with expectations, still kind of sustaining that kind of disinflationary scenario. Rate cuts now, I think, priced in for around March, if not a bit later, maybe. Any thoughts on the kind of macro outlook and outlook for the Fed policy?
Difficult to say because I'm not following it in detail. Obviously, follow the interest rate decisions, inflation, and so on. I think there are much better macro analysts out there. Not because I couldn't do it, but just because I follow mainly the charts. But my view is based on sort of what I know and what I've read and looking at the world and how it's all debt's increasing everywhere. Also in the US. I think at some point they will probably have to reduce the interest rates again. I mean, historically, we're still in a very low interest rate environment. It's not even high compared to what interest rates have been at historically. So I think they might have to, they probably will keep them stable for a while and then at some point start to reduce again, maybe even next year, maybe late next year. But yeah, it's sort of... I'm not an expert, I would say, but certainly economies, they say the US economy is strong. There are big problems in certain sectors, especially I think the banking sector. And obviously what I do primarily is follow the charts. And if I look at the S&P 500, which is a really very good, let's say, meter for the social mood, in the society. I mean, it's obviously very much overextended now to the upside because we had that strong rally. I am looking potentially at another corrective pullback and then maybe a rally in the first half of next year. Then I see the potential, at least the risk for a very substantial top, and that could lead really to a serious market crash. So that might happen next year or late next year, maybe 2025. But I think we are very close to a significant top on the S&P 500 that could even lead to a several year long bear market. I think that will have significant consequences. And I think at that point, they probably will have to reduce at the latest the interest rates, but I don't know if they will be successful. There's too much stuff that probably will collapse. And I have read a lot of good articles on the banks. There are a lot of banks that could come down in that, when stocks really go down across the board. So yeah, I think it's just a scenario not to panic about, but to be very much aware about. So and I think there's a lot of stuff that obviously there's so many indicators you can look at with regards to the economy. Yeah, obviously inflation is crazy still, despite, even though it's coming down, but is that really what people feel, on a daily basis? I mean, just go to the supermarket. So it's very difficult, and it feels like it's all getting to a point where things might just collapse at some point. And yeah, it's a bit scary, but I think it's just something to be very much aware about and to do a bit of research on as we get into 2024.
Absolutely. That's definitely a scenario. I'm also tracking that idea that, the S&P could be close to quite a long-term top. I get at that point you might expect, because obviously a lot of people nowadays would say, well, look at markets, especially maybe or the S&P, but the NASDAQ, obviously strong correlation with Bitcoin. Would you expect then that the stock market could enter a crash while we see maybe Bitcoin kind of break off and outperform? And, to be fair, that is something that we've seen happen before. For example, we had that banking crisis, right? We actually saw Bitcoin kind of do quite well. Do you think that's kind of maybe a scenario that we're heading into?
So I think, so in recent months, actually, I think correlation-wise, I think Bitcoin decoupled quite a bit from the S&P and from the NASDAQ. They might be back to correlation now, but they've actually, we got to a point where Bitcoin actually didn't care about, for example, the sell-off that the S&P had into the October lows. So they are already not correlating very well anymore, I think. But from what I know, I mean, historically, what usually happens, and there might be, they might stay ready together. They might create another, maybe even something like a blow-off top in 2024, maybe early 2025. And again, Bitcoin is probably in a bullish market, so might get to 100,000 plus. The S&P, I would also look for maybe one more pullback before one more rally to an all-time high starts, maybe in 2024. And then they could form a significant top together. So that's sort of how I see it. How long that takes on the S&P is difficult to say, but maybe late next year, maybe even end of the second quarter. We'll see. But yeah, my point is they could create a top together. And what often happens when there will be probably some kind of a catalyst that will lead to a collapse or something, and typically when there is something that you would call a black swan event, when that happens, then often different asset classes move together and they basically correlate. So like we had it in March 2020, where they did like the COVID crash, where a lot of them just started to correlate. And funny enough, also for gold, for example, I think we are in a bullish market. That's my take. It recently made a new all-time high. And also there, I see it could just, rally in 2024, but then also create a significant top. So it's sort of, we see a lot of these charts get close to significant tops. At least the risk is there. And yeah, that might explain why they might all go down together in some kind of a black swan event, at least temporarily, before then another recovery starts.
Absolutely. So all in all, I mean, pretty interesting 2024, right? Bitcoin could break to all-time highs with the market, followed by a black swan event, all within the next 12 months.
Yeah, it's so it's not an exact prediction, but I think it's something to be aware of. And certainly from a tactical point of view, that means that I will try to reduce stocks, reduce exposure to crypto as we go to all-time high territory, just to sort of raise cash, you could say, and then be well positioned for a potential crash if it happens. And we will probably see the signs as we, when everybody's bullish, then often that happens, right? When the market is very overheated. And then at some point, everybody has a position who wants one, and then things start to come down.
Mm-hmm. So absolutely, now more than ever, very important time to keep track of markets, keep track of the charts. Of course, that's what you do on a regular basis. Where can we send anyone listening who'd like to follow you and your work, where can we send them to find you?
So we are we are publishing a lot of material, a lot of content on YouTube. So the channel is more crypto online, or a channel about stocks, more trading online. And the website is just morecryptoonline.com. And there are also our links to Twitter, or X, how they call it now, and Instagram.
Absolutely. Well, for anyone listening, of course, go ahead and check that out. Some great content. I know I'm always looking forward to the next videos on YouTube. And just wanted to say once again, Ben, thanks a lot for coming on, and hope we can do this again sometime.
Absolutely. Yeah. Thank you very much. Thank you very much.
Awesome. Bye-bye, everyone.